Hey everybody, I am back from vacation. It's been a while. I'm a little tanner. It's been a interesting summer so far, not just on my vacation, but in the stock market as well. So we're going to dive right in. We're going to be talking about the Magnificent Seven stocks today. Now, these are stocks we don't often cover between Tyler and I. Tyler usually focuses on the exact opposite of Magnificent Seven stocks, if there is such a thing.
Matt brought me in screaming and kicking to talk about something people actually want to talk about instead of my
Well,
weird fiefdoms.
yeah, I mean, you talk about the companies that maybe have, heard of the Magnificent Seven themselves, and I don't know. That's the only connection really I could find. And I always talk about companies that are more value stocks, like real estate stocks and things that are not tech that you don't find in the Magnificent Seven. But we are going to talk about them. I do own a couple of Magnificent Seven stocks. I and So we're going to talk about these. Before we do, please take a minute, check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from my sponsor, The Motley Fool. It's the best way to support this work we're doing on YouTube. Again, that is fool.com/Frankel. So the question I'm posing here is if we had to buy one Magnificent Seven stock today, what would we choose? And none is not an acceptable answer, Tyler. So you can't
Stealing my
totally
thunder.
opt out. You can't totally opt out. But I kind of feel like we're on the same page in one aspect, in the sense that we both kind of feel that the Magnificent Seven is expensive right now. You were explaining before we recorded that you think it's a lot of the AI future potential is already priced into the stocks at this point for most of them. And
Yeah,
yeah, go
it's
ahead.
not it's the priced in part. I think a lot of people it's something that gets thrown around a lot in like Wall Street, or people who are value investors say, "Oh, it's priced in. Oh, it's priced in." Oh, well, what does that actually mean? And what I mean by this is like the valuations that a lot of these companies are kind of selling at today. I was just looking at it. I think that the least expensive of the Mag 7 stocks right now is micro no, sorry, Google, which has a price to earnings ratio of 27, which not the most expensive by most measures, but historically speaking, it's still a pretty expensive business relative to market valuations. And my kind of the idea of priced in is kind of this idea that AI, we see it as this huge potential thing, but what that translates into tangible revenue growth, tangible earnings growth, like how it's going to accelerate the returns of these businesses has not yet materialized, right? These aren't tangible things that we're seeing in revenue, in income for these gigantic companies. I'm sure for some smaller ones, we're starting to see, especially like hardware suppliers and things like that. But for these businesses, they have not yet been the needle moving aspects of their business. They're still kind of in the works, right? Spending a lot of money to do it. And so when we say it's priced in, what it means is that a lot of investors are kind of uh, priced the stocks to the point where they see like AI is going to happen. It's going to accelerate revenue and earnings growth for these companies. Like, and there's no if, ands, or buts about it. It's going to happen. And for me, this is where, as a probably a more cautious person, for the benefit or detriment, whatever you want to say, is some of these business models are not yet proven. And so there's still a probability that they aren't successful, and they may end up being lower return businesses than what people are expecting them to be. And so if that is indeed true, then these companies are overvalued. And so that to me is kind of the dichotomy that I'm dealing with here when I see these valuations, is saying everything seems to be pricing that AI is going to be a wild success for everyone. And I don't know if that's true or not. And maybe that just goes to my ignorance of AI. And if that's the case, then I guess, because I don't make any qualms of being a good tech investor.
That's fair enough. And like I mentioned earlier, I own two of the Magnificent Seven stocks. not the big high flyers. I own Amazon and I own Alphabet or Google, as you already mentioned. If I had to pick one today, and I totally agree that there's a lot of AI success, not just AI potential, but AI success already priced in. I would have to go with Alphabet today. And the reason why is kind of has to do with what you were saying, is that I think it's going to be just fine no matter what happens with AI. I think there's enough potential in the business and enough that already achieved in the business that it will continue to be a very profitable business no matter what happens with the AI revolution. Um, and I own kind of Amazon and Google for the same reasons, is that they're combinations. They're both combinations of two businesses, right? You know, Amazon has its e-commerce and it has AWS. Google has two main divisions. There's Google Services and Google Cloud that are kind of complementary to each other. And one is the more established business. One is the one with all the AI potential, I guess you'd say. The services business is already making a ton of money. That includes the Google search business. It includes YouTube, which you're watching this on right now. It includes Google Play. It includes the Android mobile operating system. It includes the Chrome browser that I'm using to record this. I'm using like 5 Google products to bring you this video. So that's all the Google services business. They make money off advertising, which people are going to advertise no matter what happens with AI. They make some hardware sales. They own the Nest smart home technology company. They make some from in-app purchases. They make some from YouTube premium subscriptions. For the most part, it's an advertising business. Massive market shares. I can't tell you what the number 2 search engine is. Is it still Bing? I don't know. That's how dominant Google search is. Chrome has a 2/3 worldwide market share in terms of web browsers. It's used by almost 3 billion people. YouTube would be the number 2 social media stock, only second to Meta platforms, if it were a standalone company, by pretty much every estimate you could find. And then there's the Google Cloud business that is currently the number 3 behind AWS and Microsoft. That has a lot to gain. It is gaining share. The cloud market is expected to triple by 2030 in terms of the market opportunity. But the big asterisk is a lot of that tripling has to do with the AI potential. So even without Google Cloud, I love the services business. That's 90% of the revenue today. And at a 27 multiple of earnings, $108 billion of cash, a 26% net margin from the business in the past 4 quarters. And then you have the whole other bets segment, which is essentially free. That includes like the self-driving platform Waymo. There's a bunch of healthcare startups in there. If any of those are successful, I view that as a bonus. I want to own the Google services business because it's the closest thing to a value stock type business in the Magnificent Seven that I could find and that fits my investment style and comfort level. Um, Tyler, I'm curious, do you actually own any of the Magnificent Seven?
Not presently,
Okay,
unless you count owning ETFs, where they basically are now. Like, if
sure.
you own a S&P 500 ETF, it's like
That's
30% the Mag
40%
7
of
anyways.
it.
Yeah, 30-40%. The only thing I would add to Google, and it was like, you kind of forced me into actually picking one before we did this, and mine was Google as well, or Alphabet. And just to kind of add on to the Waymo portion, because if there's one portion of AI that I have looked into, uh, more so than some of the other things going on, at least from a regulatory standpoint, Waymo seems to be one of the furthest along in terms of actually achieving some of the goals of fully autonomous driving. I know there's a lot of marketing from some other companies in this industry that purport that they are full stealth driving or fully autonomous or things like that. But if you were to ask the National Highway Transportation Safety Administration, Waymo's has the highest level of autonomy. There's maybe some competition from Mobileye. They work with like Mercedes Benz, Daimler, and BMW. But at least in terms of the Mag 7 companies that are working on autonomous driving, Waymo seems to be the furthest along. And so if you're looking for an actual like upside on Google from AI, that one would seem to be, at least in my view, the most tangible and the one that to me makes the most sense.
Well, there you have it, a rare agreement from Tyler and myself. Hope you enjoyed this. I'd love to know what Magnificent Seven stocks you're looking at. Feel free to leave us some comments.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.